Welcome to Takes Invest. We're talking about investing, finance, and professional development. As a recording time of 8:26 a.m. on the Eastern Time, Ethereum currently trade $2,543, about 2.34% so far. With respect to overall crypto market, see clearly we are relatively on more of a down to normalized fashion at the moment in comparisons to the equity side of the house. Collectively, Dow Jones is currently down about 0.56%. Nasdaq is up right now with respect to a lot of price adjustments, a price upgrade for a lot of respective tech stocks today. So it's quite interesting that they upgraded Tesla, they have upgraded Netflix, given the fact that collectively these tech stocks have been extremely oversold. So I wouldn't be surprised, to see some more price upgrades going forward. So definitely good to see there's some sort of signal of a rebound. It seems like the fundamental analysis is slowly coming true, catching up to the technical analysis that we've been doing on a daily basis, right? And something that I do on a daily basis is with respect to the 40 ish of crypto and stocks that I do analysis on a daily basis to be releasing to my Patreon members, is to compare the ones, right? Basically comparing both respective assets on its fundamental value versus the technical value that Wall Street or the investment consensus is giving it so far, right? And identify the gap to see if this is a good time to be buying right now or not to be buying right now, and then hold it for a long term, right? And use the methodology that we do on a daily basis to dollar cost average, right? And use the frame of reference quantitatively to identify what's the best execution for yourself, right? So with respect to this last week of basically January, can't believe January is already over. It seems like it just started like 2022, and next thing you know, we're like in the mid of it. So time is definitely flying. Maybe it's just us collectively getting older. As you get older, time definitely flies faster because your schedule is so jam packed, and you feel like next thing you know is like you wake up like 7 o'clock in the morning, and next thing you know it's like it's noontime, you're having lunch, and next thing you know it's like 5 p.m. and you're like signing off already. So definitely scary to see how fast time flies, and how short your life is as well. So anyways, stop with the rambling. And with respect to this week, there are a lot of things that we need to be expecting, right? And this is something that I've already depicted in my video yesterday, that collectively this week is going to be a lot of tech earnings again, right? With respect to Alphabet, Microsoft, which was already earning. Let me just take a look at the list real quick to see which are the stocks that we need to watch out for. Some of the major stocks that's going to be coming out, not Microsoft, apologies, would be Alphabet, Starbucks, Meta, which is Facebook, Amazon, and more. And these are significant trillion-dollar market drivers that will be sprinkled across this week, and we'll be hearing their quarterly results on Q4 this week. And the big events that's kind of going to be happening would be on this coming Friday. And so Friday we'll be hearing the job reports, right? And this is basically depicting the December non-farm payroll report, which based on Wall Street consensus, with the hits of the Omicron surge at the end of 2021, there should technically be a skew in these statistics. So based on some economists or the Wall Street expectation, they survey that they expect the report to show a gain of just about 178,000, with the unemployment rates holding steadily around 4%, 3.9%. So we see how that goes, right? Because I feel like based on Wall Street expectation, this is something that we know already. And the adjustment seems logical because of the the Omicron affectation. So if we are again right in alignment with Wall Street expectation with the real number, we should technically see a green day ahead. Every single time, this is something we collectively know already. If the confirmatory signal comes out to be in alignment with Wall Street expectation, it should technically translate into a net positive day. If there's a significantly, misalignment in terms of verbiage and in terms of timing expectations and in terms of quantitative numbers, it should technically translate into a net negative number, right? So that's something we know. So we see how that goes, and we should technically see some sort of adjustments or anticipatory pressure, the market try to price in that number ahead of Friday. So that's something we watch out for. And ultimately, the risk management level is laid out for us in front of us. So despite how the report comes out, we stay within the frame of reference to not allow these short-term volatilities to be affecting us. And some of the things that we also want to be mindful today is there is a Fed appearance coming on today, and this is coming up from CNBC. So it seems like there is an interview going on between CNBC and the Richmond Fed President Thomas Barkin. And obviously, as we heard from the Feds last week, they are likely to be hiking the interest rates by the first time in March, and with the same comparable quantitative asset purchasing plan of $30 billion in Feb, which is going to be happening in the coming days, and all the way to March, right? So it's going to be flat with the hike rates. So we'll see how that goes with respect to this President Thomas Barkin on his depictions. If there is, again, right, no significant misalignment in terms of verbiage, we are trending accordingly. We should be expecting, I wouldn't say any significant pressure, but I would say normalization without any significant volatility. So that's the way that I'm going to be watching the market. Definitely a lot of stirs, right? And then the other black swan news that we also want to be mindful of before I move on to a technical analysis with respect to the Ukraine-Russian war breakout, potentially. So it seems like, based on the collective news that we've been seeing so far, US and UK are in supportive of the defensive effort, for Ukraine against Russia. I'm not saying the war is going to be broken out, but I'm just saying that, UK and the US are playing like police officers, try to contain the situation. Obviously, this is an international matter. So we hope that this is not going to be, escalated into be a full break out of a war. I definitely don't hope that. The world is already a messy place. And we all need to collectively think more positively and work together rather than in a more of an antagonistic type of fashion. So anyways, with respect to recording time of 8:34 a.m. on the Eastern Time, Ethereum can trade $2,557, down about 1.81% so far. So with respect to market open today, we are seeing some anti-correlation effects coming from these equity side. You could see that NASDAQ is up about 3.13%. Because a lot of price adjustments driving a lot of tech stocks to be going up today. Obviously, because when Wall Street, saying that you should be buying, and they saying that a lot of tech stocks are at the bottom, investors going to sell part of their crypto to be buying, right? It's a form of just retail reallocations of their portfolio. But ultimately, we do not, get disturbed by that type of rotation. We ultimately believe in a long-term value and long-term fundamentals, and based on the technicals and the fundamental analysis, we can tell that Ethereum is still at the relatively discounted value with the 34 out of 70. We are cross up right now, and it seems like the bottom we've been forming for a little bit of time, not a long time, ever since the 21st of January all the way to today, to basically the beginning of February right now. So the real level that we need to sustain to keep going would be the 2,630 and then 2,850. So we'll watch for those levels. And respect to Bitcoin, down about 1.81% with the 37, gliding at the comfortable level, right? The real level we need to get up to is the 40, right? So as we get to 40, that would be confirming that there is a reversal going on. And the real level, next level is going to be 44, right? Right, the 34 out of 70, so still relatively discounted, not terrible. Dogecoin right now is the 1395, up about 0.15% with 38.57 out of 70. I like anywhere from the 1325 all the way to 12 cents. And again, these are risk management levels to dollar cost average at, right? These are not price projections. Again, remember the fundamentals, right? When I say that we're taking the logical risk, is because we do not have the capability to time the market, nor do we have the capability to understand where the price will be going the next week or next month, right? We ultimately believe, when investing is basically comparing technical analysis with fundamental analysis, identify the gap of margin, which you could capitalize on, right? So hopefully this is, sticking into your methodology, because I feel like this is a confusing part that some people don't understand. It's like, why are we going to these levels? Why are we going down to these levels? Like you said that 3,150 was the level, but again, we are comparing this relatively, right? The reason that we don't change the price level is because within the frame of technical and fundamentals, these are the frame of reference, right? And what you do is purely look at the gap, and that's how you invest. Okay. And with respect to Cardano, we are at the 102, so anywhere from 102 to 92 is still fair level with the 30 out of 70. Solana is at 91.53 right now. I plan on buying more. If we're gonna go back to below 90 all the way to 80, obviously. XRP is now about 4.71. I like anywhere from the current level to 55 cents. Polkadot is now about 4.62%, 17.75. I like anywhere from current level all the way to 15.87. Algorand's down about 3% right now. Anywhere from basically 90 all the way to 79.83. Shiba Inu is at the low 2000s again, right? Low 2000s to 1400s to 900s. Polygon down about 1.60%. You could see another flash crash. I do not like this. This is very funky. Seems like there are a lot of whales in this equation. So, but again, if you believe in this long term, 143 to 120 would be the logical levels. But with this type of funkiness, I just don't feel high comfortability. AVAX down about 2.5%, 59 to 50. Terra down up about 2%. We are approximating from the 45. So again, 62, 52, 45. So 45 is coming. And respect to risk management level, these are levels identified so far for the respective coins. Let me know if you have specific questions, how or any feedback with respect to the updates that we do on a daily basis. And for my Patreon members, I always welcome any feedback or any constructive criticism as well. Because I feel like I speak a lot, from one side, but I would love for some reciprocation or just some feedback from you. And I appreciate you guys are asking questions, but there's I want to refine this further, and I just try to identify ways for us to get this even more efficient and user friendly for you. So let me know how it goes, and hope you guys have a great Monday as well. Take care.